There's still a lot of uncertainty and conflicting opinion about when the Reserve Bank of Australia is going to start cutting interest rates. I've actually held the view since November last year, when the Reserve Bank last raised its cash rate to 4.35%, that it would keep the cash rate at that level throughout 2024 and wouldn't begin to cut rates until February 2025 at the earliest. That's partly because the Reserve Bank was later to start raising rates and has raised them by less than its principal peers in the US, the UK, Canada and New Zealand. The Reserve Bank has clearly been willing to tolerate inflation being above its target for longer than its peers have been willing to tolerate inflation being above their respective targets, in order to preserve as much as they could of the gains that were made in reducing unemployment and underemployment to hitherto unattainable levels in 2021 and 2022. Because they started later and haven't raised their interest rates by as much as their peers in those other four countries, it's always stood to reason in my mind that inflation wouldn't fall as quickly as it has in those other countries, and the Reserve Bank would be later to start cutting rates than the US Federal Reserve, the Bank of Canada, the Bank of England and the Reserve Bank of New Zealand. That's frustrating for people who have mortgages, but on the other hand, the unemployment rate hasn't risen as much in Australia as it has in all of those other four countries. I don't think the Reserve Bank will have sufficient reason to be confident that inflation, and in particular underlying inflation, will be heading back towards its 2 to 3% target range until it's seen the December quarter CPI, which it won't get until late January of 2025. But when it does, I think they will be sufficiently confident that their first cut will be of 50 basis points rather than 25 basis points, as markets seem to assume. Now, that's partly because the Fed's first move in September was a 50 basis point cut, but it's worth remembering that the first four increases in the Reserve Bank's hiking cycle back in 2022 were also increases of 50 basis points. And a cut of 50 basis points in February next year would be an emphatic signal to households and businesses that the Reserve Bank thinks that the mission of fighting inflation has been largely accomplished, and that they're switching their focus to avoiding unnecessary further increases in unemployment or a further slowing in economic activity.